thank you guys so much for tuning into today's live stream. Today is February 28th, 2025. And to begin today's live stream, I do want to take a look at the economic calendar here. So we have core PCE price index at 8:30, and then we have President Trump speaking here, tentative. So we have some, red footer news coming into today specifically. I don't necessarily have a bias, because today we are actually closing on the monthly candle. It does say two days to the closer, but today's the last day of February, so I'm anticipating for prices to maybe possibly have some sort of retracement here back inside the range, right? Candles don't continually, just dive lower or higher. We have to have some sort of like a open high-low close. So coming into today, like I said, I could anticipate that. But I don't necessarily have a bias here coming into today. So this is the daily candle from yesterday, right? And the way that we closed, I don't even have my, TGIF is here, and just going back because I guess I didn't have my screens on. Going back to TGIF, right? A candle doesn't always a candle form, like the way that a candle forms doesn't just continually go down, right? There's always going to be that, open. If it's a down close candle, then it will manipulate up higher and then create the expansion lower. And then after expansion is the closure. The closure is when prices retraces back inside the dealing range. So like right here or so, right? And that's typically what a candle looks like. So coming into today, I could anticipate for prices to have that open, right? High, low, close. So I'm anticipating some sort of retracement here. Back inside the daily, or not the daily, but back inside the dealing range here of this monthly candle, because we're about to close here, like I said, in like literally after this trading session. So I'm anticipating that closure today. And like I said, if I'm anticipating a closure of a monthly candle and a weekly candle, I want to apply the TGIF setup here on those time frames. So I want to see, like I said, a retracement back inside this dealing range, possibly. But yeah, going on to the daily time frame at least, this is the daily candle here from yesterday, right? With the way that we created this candle, I could anticipate for us to take out the daily low. And this daily low, which we did end up taking, after we complete the daily objective, I can't use this daily time frame as an objective anymore, right? I can't use it as a higher time frame bias, because like I said, my bias here was for us to take out the daily low, which we did take out. And so now I don't necessarily have a bias anymore coming into today. So with that, I want to use maybe the 4-hour time frame, the 8-hour time frame, just any time frame that's intraday. So 4-hour, 6-hour, 8-hour, 10-hour, 12-hour time frame for a directional bias. This was the beginning of it all, to be honest, right here. So, you take this short, and I'm not too sure who held, but, you could have gotten 1,000 points, which is kind of insane. But, yeah, this was like the turning factor here. And it makes sense here, right? We have Tesla selling off as well. Tesla is actually pretty, weak here, to be honest. We're about 280, which is, you know, relatively week. I mean, last year we did trade all the way down to 179. So I mean, who knows? We could end up selling off down to here on Tesla. Yeah, Tesla. Let's check out Nvidia. Nvidia is also selling off. So the current. So the high of the week here on Nvidia was 138. Now it's trading at 117. So all of these companies right now are selling off. We did end up taking that high too. So interesting, very very interesting. But yeah, going back to NQ on the weekly chart. With the way that we're creating this weekly candle here, I could anticipate next week for us to take out the weekly low here. Same thing here on the monthly time frame. So I can actually anticipate for us to trade back inside the dealing range here, to discount. So if we create that bearish week monthly candle, I can actually see us continuing lower, to retrace back into the discount of this specific dealing range here on NQ. So let's see. Actually keep that on monthly time frame or the weekly time frame. Selling off, it just, I mean, we've been consolidating to be honest, for a while. Like all of this back and forth, actually, and this is the daily chart, keep in mind. So now that we're starting to see some sort of a, you know, movement lower, this is good to see. But yeah, I want to see us retrace back inside the discount of this dealing range. It's a monthly dealing range and a weekly dealing range. Entry pattern could be this daily for right up. Completed the 3-day objective, 2-day time frame. About to close here on this 2-day time frame soon. $8.42. All right, so we still have about like what, 18 more minutes left until the closure of this 4-hour and 8-hour candle. So for right now, I'm just gonna wait until we can actually close here. Trying to see, once we close here on this 4-hour candle and this 8-hour candle, we'll get an objective, right? Because every single time frame and every single candle has an objective. So once we close here on this 4-hour candle, we should or we will have an objective. So if we create this kind of bullish candle here on this 4-hour time frame, then I could anticipate for us to take out the 4-hour high, and vice versa. If we create a bearish candle on the 4-hour time frame, I can anticipate for us to take out the 4-hour low. And this concept, the power of 3 concept, could be applied to, you know, the 8-hour time frame, the 12-hour time frame, the daily time frame, the weekly time frame, the 15-minute time frame. Every single time frame, you can apply this concept to every single time frame. There's a quote that ICT states, if you can apply the daily, if you can view the 4-hour time frame as the daily time frame, your perspective on prices is going to change. And that's how I'm interpreting that, right? So if I were to apply, if I was trading ICT concepts and you're just taking a look at this daily candle here, right? Hey man, we had this, pretty bearish daily candle here. Like the next daily candle, I can anticipate for us to take out this daily low, and maybe we could end up, creating this daily fair value gap. That's kind of like whenever you first started trading ICT, that's kind of how you viewed prices, right? So let's apply that same concept, but onto the weekly time frame. And right, it's the same concept. Hey man, this weekly candle closure, very bearish candle closure here. Bare minimum is for us to take out this weekly low. After we take out the weekly low, the weekly objective has been completed, so I can't use the weekly time frame anymore as a higher time frame objective or a higher time frame bias. What do? We take out the weekly low, and then we are, continuing lower. Apply that concept to every single time frame. Prices is fractal, meaning these things happen a lot, and they happen on every single time frame, right? So let's see, coming into this morning, I'm going to apply that same theory and same concept to the 4-hour time frame and the 8-hour time frame for some sort of directional order flow, because like I said, I can't use the daily time frame anymore for a daily bias. Wow, we moved 800 points yesterday. Kind of gnarly. That's a lot of points. U.S. trade deficit jumps in January. HP stock drops after PC maker gives weak outlook. Bitcoin price falls. Global crypto markets value is down 1 trillion from peak. Should you buy the peak or should you buy the dip? Read our new Lookout Markets. New Look Markets AM newsletter. Alright. Spotted the Oracle of Omaha doesn't time the market, but if he did, then he wouldn't get out of bed for the S&P 500's 4.6% drop from all-time highs 9 days ago. Should those of us with far less money be patient, and with far less money and patience be tempted? Historically, it's about an even bet, often profitable, occasionally, but that isn't how it feels to most investors. A survey last summer of 2016 American adults by personal finance site finder and broker Tasty Trade found that more than 3/4 with brokerage accounts had less than 15 years of investing experience. Half had begun since the COVID-19 stock swoon. Instead of scaring the Gen Z and millennial cohort away, That sell-off, the shortest bear market ever, emboldened many to open brokerage accounts with immediate rewards. On the COVID bottom's 1 year anniversary, nearly every U.S. stock had risen. It was like being invited to bet on black without limits at a roulette wheel on which 37 of the 38 pockets were black. Never experiencing the paralyzing fear of the 2007 and 2009 meltdown, and then enjoying the buying opportunity of the century aren't the only reason younger investors tend to pounce on sell-offs. The post-crisis years were the golden age of dip buying, says analyst Warren Pies, the founder of 314 Research. Since 1950, there have been about 130 pullbacks, which he defines as a dip in the S&P 500 of about 5% or 10% from a rolling 3-month high. Before 1998, which was when the Federal Reserve got into the habit of riding to market's rescue, it was a coin flip whether stocks would then fall into correction, defined as a drop of 10%. Dip buyers odds got better after that, and then better still between 2009 and the COVID crisis. It's probably no accident that the rude abbreviation BTFD was born in 2011. What changed? Economic conditions made it easier for the Fed to keep opening the monetary spigots without stoking prices. Good things can't last forever, though. Inflation spiked to 4-decade high after COVID stimulus and supply chain disruptions. That makes sense. I mean, we printed a lot of money during COVID, and because of COVID, supply chains, like, we aren't able to not produce, but I guess our production slowed down too, because the shipments of, for cars, the car hoods, whatever, is delayed due to COVID. And let's see. The Fed had to hike rates rapidly in 2022, even as stocks entered a bear market. What do you hike? What exactly? Oh, hiking rates means to increase rates. Okay. Hike rates rapidly in 2022. Inflation is down, but not completely tamed. Okay, that makes sense. Whenever they raise the interest rates, it encourages savings. Inflation goes down, but not completely tamed. If the market's recent losses continue sending stocks into a pullback territory, then the odds of them moving on to a correction probably are higher than what most investors expect. And that matters. Once stocks have fallen by 10%, then the chance that there will be much worse losses rises. So dip buyers should take their lumps and sell. He summarizes it with the astute social media posters risk management rule of thumb: to increase risk down 5, reduce risk down 8 to 10, have a big ammo to buy down 20 plus. What would Buffett's advice be now, other than gamble, since most of us invest part of our paychecks instead of sitting on a mountain of cash like him? It might be to see the glass as half full. Being able to buy 5% more stock than you could a couple of weeks ago is a good thing. I don't know, technicals wise, for me at least, I could anticipate, for us to, like the yearly candle here, I was anticipating for this yearly candle's high to be taken, which I still want to see get attacked. It's just whenever you go into like the 6-month time frame, there's not a lot of displacement, right? Even on the 3-month time frame, not a lot of displacement. Let's check out the 5-month time frame. There is displacement here, in fact, actually. So there is a fair value gap that prices could trade back into here. So let's actually put that as a fair value gap. Let's check out the 4-month time frame. No fair value gap. 3, no fair value gap. 2, no fair value gap, and 1. So it's reasonable for us to see this retracement back inside the dealing range of it's reasonable for us to see a retracement back inside this fair value gap. There's discount, so I mean, okay, yeah, bye ma. Yeah, bye ma. So I could see us retrace back inside the fair value gap, this 5-month fair value gap, and for us to retrace back inside the dealing range of the monthly dealing range. So it makes sense for us to retrace back into here. It's just, will we get an opportunity? Because my brokerage doesn't allow me to short for or hold my positions for over a day, which kind of sucks. But like seeing this short here is, I mean, it's pretty nice being able to spot it, right? Let's see. We're about to close here on that 4-hour candle in about 4 minutes or so. So I'll have a bias here. Or sometimes even if the candle closes, the objective isn't clear, so I just sit on my hands. So it just kind of depends on how we close here on how we close here on the 4-hour candle and the 8-hour candle. Should you buy the dip? That's a good question. If I were to buy the dip, right here would be a reasonable area to buy, right? That could be a reason for us to buy there. But let's check this out based on the 12-month time frame. Is it a reasonable spot to buy? Yeah, it is. I would have my stop loss here, actually, something like that. Because I actually don't want to see us have an immediate rebalance here on the 12-month time frame, at least. But is there economic factors on like the higher, I guess on the higher time frame that would suggest higher prices? That's the question. One minute left until we close here on the 4-hour time frame. See if there's anybody in chat. Hey, we got 80 subs right now. Whoa, whoa. 14 seconds left here. Not very confident in the way that we're closing here on the 4-hour candle. So I mean, I might just elect to sit on my hands. So there's open. So the way that we close here on the 4-hour candle, and I'm assuming on the 8-hour candle as well, it's not clear what we should do, and there are times when that could happen, and the best thing for you to do is sit on your hands, right? So here I'm just going to wait and sit on my hands, let prices do its thing. No need for me to really force anything as of right now. So yeah, that's how I would kind of see it for right now. Going into, I mean, while we wait for a setup, I'm going to do some pros and cons here with you guys. What I should continue to do, what I can work on, and then, yeah. So coming into this week here, what I should continue to do and what I could continue to do is taking consistent trades. Every single trade that I take, I should have a higher time frame objective, I should have a model, and I should have an entry pattern. All of those components that I require should be present whenever I am in a trade, right? If someone were to ask me, hey dude, why'd you take this trade here? I should be able to explain to them this and that, and I should be able to explain clearly, and I should be able to identify the requirement at ease. So if I were to go over some of my trades here this week with you guys, I can, it's very easy to point out the higher time frame objective, the model, and the entry pattern. So taking those consistent trades. Second, being patient. Sometimes whenever the market, has these large moves here, large expansions, you might not be given a opportunity to enter anything, right? And that's completely fine. You have to be able to find peace, and sometimes it might not work out for you, so you got to be content with that, right? Be patient. The conditions in the markets aren't always going to be good. I don't know if good's the right term, but it's not always going to be in your favor, or it's not going to always align correctly with your strategy. So if your strategy isn't present in the current conditions in the markets, sit on your hands. No need for you to force anything. As a trader, we can't control the outcome of your trade, but you can control how you execute your trades, right? And that's just something that you have to work on, and it becomes a little bit, I guess, easier as time goes on. But yeah, I'd say that's probably one of the important factors of a it's one of those components that make up a good trader, right? Third thing here, stream. I try to stream 2 days out of this week, where I think it was Tuesday and Thursday, where I just couldn't start the stream for some reason. It kept giving me this error and stating how it's not working, and I was just like, man. But I did my best. Try to stream every single day. yeah, reading the Wall Street Journal every single day. Last week, I was able to have or kind of have a basic an understanding of credit card interchange rates, why a weaker dollar could indicate stronger stocks, and that idea is because if they're if the dollar is cheap, right, compared to relative to another currency, that allows, China, Russia, Canada, Mexico, all of the other countries to be able to buy our products, right, at a cheaper, I guess at a cheaper price almost. And because of that, it allows our stocks in whatever product or service that they're buying, it allows the stocks of those products and services to rise. But I need to do some more research. That could have been wrong what I've just stated there, but that's kind of how I'm interpreting that. And what I can continue to work on here is when looking for an entry pattern to take a trade, right? The fair value gap has to always be, I guess, created within the time frame of my model. So if I am taking a trade here based off of, a 4-hour model, the fair value gap that I'm looking for to take a trade off of should be created within the last 4 hours of trading. I can't look past that. And that kind of like interprets by like that. What that means is that the displacement has to be created within a reasonable time, right? The displacement can't be in the past. It has to be in the present for us to indicate there's strength in the markets. If I'm using, past strength in the markets, it doesn't correlate to the current conditions and prices, if that makes sense. And some improvements here for next week. Like I said, continue to take those consistent trades. Every single trade that I take, I should have a higher time frame objective. I should have a model, and I should have a entry pattern. Be confident in that. Be able to execute. That's it. That's the only thing that you can control. You can't control what the outcome is going to be, but you can control how you execute your strategy and how you can practice your patience and discipline when the conditions in the markets aren't favorable according to your strategy. Second, understand that you don't need to force a trade to happen. Sometimes you can go days, weeks without taking a trade if your strategy isn't present. So if it's not present, don't force anything. Third, your fair value gap entry must, and it should always be created within the time frame of your model, like I stated before, and aggressive trading. But yeah, I guess coming into today, and I guess coming into this morning here, I don't necessarily have a bias. I mean, we have every single time frame has an objective, right? But I'm not confident in the way that we created this 8-hour candle and this 4-hour candle. And if I'm not confident, or if I can't really, come up with a good story, then I just sit on your hands. And that's exactly what I'm going to do, actually. So with that, that's going to wrap it up for today's live